Hello, this is Andrew Pancholi from the Market Timing Report. It's the 28th of April 2021. In this short video, I want to show you some patterns which suggest we need to be on alert for a possible change in trend. The key markets are the US equity markets, specifically the S&P 500, and I want to show you why they are in a critical zone right now. This is really to update regular followers of the Market Timing Report, but also I think it'll be of interest to a lot of you just to see how these cycles repeat. And let's go back then to 1901. This is 120 years back. 120-year cycle, as you know, or those of you that are familiar with our work, we look at super long-term cycles. 1901 is 120 years back. There's a clear 60-year cycle in economics and markets, often pretty close to referred to the Kondratiev wave. Two of those cycles back takes us all the way to 1901. It's also 6 cycles of 20 years, which is another critical period, or you can break it down into 40-year patterns as well of 3 of those. In any event, what we do see, and the key point is that the 30th of April here in 1901 saw a significant top, so that's just 2 days away. That would be Friday this year, and then a sharp sell-off just into the first week of May. Nevertheless, it was a sharp sell-off, and that's a pattern worth noting. Now I'm going to move back 50 years. 50 years is half of the 100-year cycle, the centennial cycle, and we saw something quite interesting here as well. On the 28th of April, we got a major high, and then we got a significant sell-off through the course of the year. Now, I'm not saying that's going to happen, because if you looked at the last one, we saw there was just a sell-off for a week or two. But both these patterns so far are suggesting that a top is potentially likely. And then the 40-year pattern showed a high coming in on the 27th, which would be the equivalent of yesterday. And at the time of filming this, the S&P has just been pretty much flat. It's been up just a few points and down and hovering around the same sort of price level. Again, in this case, you see a short, sharp sell-off really into the beginning of May. So this pattern, and the first pattern, the 120-year cycle, so that's 40 years and 120 years, so you can see how they fit together. Both suggest a short, sharp sell-off. Now, in our report, for those of you who have this, we look at the decennial patterns, and the key point to make was that we look at the 10, 20, 30 and 60-year cycles. And the 10, 20 and 30-year cycles all see turns between the 28th to 30th of April. 2 of those were highs and 1 were a low. And then we have our profit-finding oracle dates, which here, just the key dates. There was the 9th, that gave us that surge up there. The 16th gave us that high. The 23rd turned us up. And the 20th of April is here. So are we going to see a high? I don't know. We'll have a look. We'll wait and see. But that's how we use these dates. And they come from these histograms. The histograms here are these spikes. When we see these spikes, we can expect a turning point. And they are predictive in that these are all projected into the future. And you can see how this one here caught that high, this one caught this low, this one caught this high, this low, etc. And we've got a fairly big spike for right now coming in. So that's why we're on alert for what I think we might possibly see a reversal. Obviously, we're going to trade the market. We're not going to forecast or guess. But these things suggest that there might be a potential turning point. So it is these cycles here that are giving us a sort of alert, and that's why I'm putting this video out, because we've taken the yearly cycles all the way back from 120 years and we looked at 50 years and 40 years. Then we saw the 10, 20 and 30 year cycles all showing turns around about now. And then we've done what we do with these histograms. For those of you that are not familiar, we do these on a daily basis as well, and that's why we're getting the 28th showing up. So that is why we're on alert. If you want to join us, the next edition of the Market Timing Report will be out in the next few days. You can see future turning points on our website as well, markettimingreport.com. Bottom line is, if you're long, protect your positions right now in the S&P 500, and it's possible we might get a short, sharp reversal over the next few days, but nothing is guaranteed. Thank you.